All right. Anyway, everybody, welcome to episode 111. Today is National Earned Income Tax Credit Awareness Day. Other than a few government calendars, I couldn't find where this is being promoted anyplace. If you're looking for me, here's a copy of my QR code. This will scan it. That'll pop my information into your phone. Feel free to reach out. Starting next week, we're going to move the program to 4 p.m., at least through the end of tax season, 4 p.m. Eastern time. It'll be available here, be available on YouTube Live as we do the program. Eventually, maybe it'll just go to YouTube Live. But right now, register on Big Marker. You can also watch it on YouTube Live. And of course, it's always recorded. As of 2:45 today, none of the IRS processing information was uploaded. I think they might still be concerned there's going to be a shutdown effective tonight. Remember that unless they pass a continuing resolution or come up to some sort of agreement, right now, apparently ICE is the big hangup. So these are all the January 23rd numbers. Hopefully we'll have better numbers next week, and hopefully the IRS will be open and available next week. So a number of things are happening on the legislative agenda this week. Worth mentioning, government funding crisis. We have a high shutdown risk as of 9:39 this morning, and I did look at 2:45-ish. They're still negotiating. It's interesting that the Republican leadership is the president. So the president and Chuck Schumer, the Senate Minority Leader, are the two that are negotiating. This isn't the House and the Senate negotiating. It's the president and the Senate Minority Leader, so that they can get enough votes, because they're sure they're going to pass it in the House. They're now trying to make sure they get enough votes in the Senate. One of the large issues here is, without getting political, is what's been going on in Minnesota with ICE agents, Border Patrol agents, and this is becoming a stalled issue. One thing on the table is to either pass 5 of the 6 continuing resolutions, which would mean no funding right now for ICE, or potentially minimal funding for Department of Homeland Security. And then this becomes a bigger conversation centered around funding. Health credits have still not been settled. So there's no Affordable Care Act Affordable Care Act credits. So folks are paying full price or doing without insurance. Be very interesting what happens if folks did not elect into insurance January 1st over the cost, and if we actually get credits back on the table, if people will be able to register late, if they open up a special enrollment window. I hope that they do. I hope that they think that far ahead. The Senate Republicans have a narrower renewal in place for the enhanced Affordable Care Act premium tax credits, but they're adding a couple of restrictions. Now, again, this is a proposal. There's going to be implementation of strict income caps. Unclear what that means. Does that mean if you reach a certain point or monthly income, they're going to cut you off? I don't know. They're going to introduce fraud penalties. Now, how many times do we see this where somebody makes too much money and some navigator out there or the taxpayer themselves, oh yeah, I'm not going to make that much money this year, and they get an 80%, 90% credit. It'll be very interesting to see what those fraud penalties look like. It's just broad strokes right now. And supposedly the scope is going to be reduced. Will that mean less people available or more narrower choices? We don't know. House Ways and Means Committee, so the other side. The attorneys for the Republicans at the House have a lot of skepticism, disagreement over the things the Senate Republicans are proposing. And that's interesting. If you read that, the Republicans and the Republicans are opposing each other. There were a number of extenders unrelated to healthcare that had been attached to the bill. They're pushing back. There's concerns about mixing the policy objectives. So basically, the House is saying, the House Republicans are saying, let's get this done. Let's get healthcare done and move on. Let's not tie other things up to it. So this will be interesting if the Republican House and the Republican Senate can't agree on what they want to do. This is suggesting that extended negotiations are going to have to go on. So that may leave the rest of us doing a lot of planning this year if there are substantial changes. Again, like everything else, OBA was all retroactive for 6 months. What's this going to do? So I wanted to bring this up only because I get all sorts of requests from folks. Let's talk about this idea, that idea, all these tax schemes, right? And some of them are interesting ideas. Other things are just completely wrong. So I hadn't seen this, but there's an entity out there, White River Energy Corporation, and they are selling tax credits that don't exist. So these tribal tax credits, and they're selling them to trying to get wealthy investors to buy into them. They don't exist. Tax deduction credits that don't exist. So Senator Wyden of Oregon has urged the SEC to revoke White River's securities registration. So right now they're selling licensed securities that are fake. I guess so now we'll just have to sell fake securities that are fake. But they want to pull whatever registrations they have. There's an ongoing criminal investigation. This will put things, of course, into the public eye, what they've taken away, what they're not allowing them to do. All of us should exercise extreme caution when we look at anything called a tribal tax credit right now, and there's probably got to be a much higher level of due diligence. Personally, I don't know that we should be involved in these things. That's what they have attorneys for. That's what they have other partners for. The IRS released a document this week on their success in the COVID failure to pay penalty relief program. You'll remember that in 2022, the IRS suspended automated collections of any automated notices during the pandemic. Of course, failure to pay penalties, and they continued to accrue during this period of time. So recognizing the inequity of this, that we suspended it and we're not reminding people of notices, well, how can you charge people for it? They knew they did. They knew they hadn't paid, but whatever. So the IRS had said, you know what? We're going to abate a whole bunch of penalties. They abated almost everything that happened during that period of time. Late filed returns, a whole bunch of things. So for tax year 2020 and 2021, if your assessed tax was under $100,000, notices were sent prior to December 7th, 2023. That was sent or supposed to be sent. They would abate the penalty. They identified 5 million accounts and accurately abated 99% of them, probably to the point of too many. TIGTA found where they missed 2,100 cases. Leave it to TIGTA, Treasury Inspector General for Tax Administration. Normally they pull 1,000 cases and they find errors with 20, 30%, 200, 300. They say, oh, I have a 20 or 30% error rate. I got to tell you, that's pretty awesome that out of 5 million accounts they wanted to abate, only 2,100 were missed. And of course, as we've discussed in the past, the way these reports work is TIGTA goes back to IRS management and says, hey, we caught this. Do you want to reply? Well, in this case, the reply was, yeah, we're going to fix it. They've committed to making manual adjustments to take care of these things. So that's great that we can say 2.5 years later, hey, we got that one right. Secure Act 2.0 still isn't fully implemented. A number of things you'll recall, the RMDs, a number of things were delayed 5 years. So notice 2026-9 is relieving all of the IRA custodians and sponsors, giving them an additional 2 years to implement a whole bunch of rules related to traditional IRAs, Roth IRAs, SEPs, simple plans, and medical savings accounts. And just the belief is that everything isn't done. We don't have the language done. We've had shutdowns. We have less staff. So we don't have our homework done. Can I please have an extension of time? So they gave them the extension of time. Heaven forbid if you had said to them, I don't have my audit material ready. Can I have an extension of time? They aren't so great with that. So the Senate Democrats are challenging some IRS budget cuts and what they're doing with their enforcement priorities. They're saying that we may see audit selection bias. And what I'm going to tell you about, we've seen this before. There was a huge case. Stanford University did a study, and the Center for Poverty and Law, one of these other groups, did correctly done, peer-reviewed, statistically accurate sampling. So this isn't stuff that's new. But so the Senate issued a formal warning to Commissioner Bessent that the IRS budget reductions are going to shift the audit burden away from the wealthy. Why? The wealthy, we can't do as much automation. We sit down, we dig through their paperwork, we spend a month on it. Other complex partnerships, the same thing. What's going to happen? They're going to push and do more working class taxpayer exams. Why? Automated underreporter CP2000s are just easy to match, easy to do, because the bulk of the income and expenses on these folks, especially if they don't itemize, are reported by a third party to the IRS, and they can match it up. So we've seen this in the past. When enforcement budgets decline, the IRS begins to look at lower complexity audits of wage earners, those with the EITC, those that claim head of household, those that claim other refundable credits. You can argue that they don't gravitate towards it. They just don't have the money to do anything else. So even if we stay at the same level of these audits, they end up being a higher percentage of the total simply because we don't have to decrease our work. Now, this was surprising, and I didn't get a hold of anybody to ask a little bit about it, but in the congressional oversight this week, they said that Criminal Investigation Division has been reassigning their special agents. Now, there's only about 2,200 special agents to begin with. Those are the guys with guns, travel in pairs. These guys, already a quarter of them are assigned to special details like protecting the commissioner and some of the deputy commissioners. So these are high-trained financial crime investigators, and they've been sent up to do immigration enforcement activities. I don't know what that is. I would assume they're using their same tools, just over in the other division, not in the tax department. So without more information, it's difficult to say, other than you're going to see less IRS enforcement right now, more complex investigations, simply because those folks have been reassigned. Some of the Senate oversight committees have submitted detailed inquiries regarding what the IRS is doing with artificial intelligence in enforcement activities. We've been hearing for a couple of years that they, Palantir, whatever the name of that company is, they've invested all of this money before it was taken away last week, in rolling out these tools that will dive deeper, make better connections, and otherwise help to do these exams. So first, Congress is asking, which enforcement tasks does Treasury think AI can replace? And what's the basis? What are they making that determination on? Well, I asked ChatGPT, and it said AI is a better way to audit taxpayers. Bias prevention standards. What technical and procedural safeguards will be used to prevent racial, ethnic, and socioeconomic bias in AI-driven audit selection? So Ellie Jones and I have that discussion. I'm a fan. If you've taken any of the AI programs I teach, I've said one of the things you should be doing is tell the AI who you're addressing the program to. For example, if someone is not a native English speaker, doesn't have a college degree, doesn't have an accounting background, you should tell the AI that, and it will write differently. Well, one of the problems Ellie says to me is, where do you think bias comes from? And she's probably right. To the extent you train the AI to do these things, is that AI now biased? If I teach the AI to look for earned income credit fraud on every return, does it now get biased that refundable credits means fraud? I don't know, but it's a valid concern. Congress is also asking, what are we going to do about large partnership audits? What's the current status of the specialized large partnership audit group? We've heard that they're not starting new cases. How have the staffing losses impacted these examinations? These are exams that require 3, 4, 5 people. What are they doing? How many of them are sitting on the shelf? On higher dollar case issues, Congress wants to see some evidence that AI tools can actually improve the detection rate in high dollar complex enforcement issues, where it really needs to look where you can't give it that set of check marks, check the box to figure out. So what should we be doing? This is, how does this impact us? We should be communicating realistic timelines for folks with return processing. We're going to talk about that. Oh, you know what? This slide. This slide's out of order. Let me skip this slide for now. So how about the compliance risk here in I feel like I'm missing a slide. All right, let's just cut ahead here. So what are we going to do here in terms of navigating compliance risk in this under-resourced environment where the IRS has less people? So the IRS has created a paradox. Overall exam coverage is going to decline simply because they have less bodies to audit. As they roll out AI, it's probably going to shift disproportionately to these less complex returns that can more easily be automated. So does that mean EITC exams and refundable credit exams? Yes, that means we need to be more diligent. If you didn't tune into Jason's due diligence program last Saturday, it's on demand. You should. We're going to see reduced examination coverage of large partnerships and high net worth individuals. I think we've seen that steady decline since COVID. We've talked about increased reliance on automated systems and correspondence audits. Here's what's scary. How do you get to a person if you need to? Do you end up having an argument? We've all, if you use AI, we've all had arguments with the AI that either we're not getting our message across or it's not understanding, it's having a bad day. Will this also mean longer exam cycles? You're going to see some stuff coming up where things that are already sitting for 6 months are going to be sitting longer. So Congress taking a look at this suggests some policy changes ahead, but in the short run, I don't know. Don't know what's going to happen. All right, so we said there's a reduced risk of high net worth and complex partnerships getting examined, but there's probably a moderate risk of small business and complex deductions getting looked at. It's going to be inconsistent scrutiny. May even see some wonky something on a return flags the AI or flags an examiner, and you end up with an exam on something. The big thing, though, is our EITC refundable credit, folks. There's a lot of dollars on what can appear to be complex returns if you don't have all the facts. Of course, the facts can make it complex, case-by-case basis. But we're going to see more of these audits. When I owned block offices, this would terrify me that, potentially half of my clients are going to see an increased audit risk. Something to think about. This was a great image we found somewhere while putting this together. Okay. I'll come back to a few of these things. So TIGTA put together a readiness assessment on the service. TIGTA is Treasury Inspector General for Tax Administration. They had a busy week this week. They took a look at the realities of the IRS and said, guys, you've got a problem. So they think that we have a perfect storm of challenges. So they did this audit, and it shows that the IRS has never been in such a bad position in terms of workforce, technology, and readiness than it is today. And they broke this down into a bunch of critical areas. The reduced staffing, we are back to the October 2021 levels following all of these reductions that they've done. So all their expansion got pushed back. But there's an argument that says the wrong people retired or took buyouts and the right people are still there. That's a problem. Inventories have surged. I'm going to show you this. They're higher than they were at the end of the pandemic. The 2025 government shutdown just disrupted the hiring timeline, the efficiencies that they were going to get from modernization, and it's made a mess for this year. So IRS lost about 19% of its workforce, net 19,000 employees due to the reduction efforts. Filing season programs lost another 8,300 people. So we are at the pre-Inflation Reduction Act levels. We're back to the 2020 levels here. Overall inventory at the IRS of returns in process, cases in process, are 129% higher than they were at the end of 2019. In other words, they have more than doubled, right? Amended returns have quadrupled. Error resolution cases have quintupled 5 times compared to 2019. The government shutdown, the new Treasury approval processes impacted recruitment. They expected to hire 2,200 people. They were approved for 2,200 to get tax season up. They hired 50. Process that. They were approved to hire 2,200 people. They only got 50 hired. And it actually may not be their fault. There's a training deadline of 60 to 80 days. We had a shutdown. Key technology initiatives such as Taxpayer 360, which is a huge software change that they expected to have, has been pushed out till September. The zero paper initiative of scanning everything, they learned their lesson after COVID, that's failing. And the AI-enabled tools are not available yet. Let's look at this. So first, the inventory backlog. They have an unprecedented growth in processing backlogs. As of December of 2025, the inventory went up, we said 129%. The inventory went from 871,000 unprocessed returns and projects in December of 2019 to 2 million at the end of 2025. We said more than doubled, 129%. Amended return backlog is the worst, and watch social media, talk to your clients. It increased more than fourfold from 132,000 to 548,000 cases. I wouldn't think they amended that many in a year, and much less get that far behind. Error resolution cases, we said 400% increase. Paper returns and rejects have more than doubled. So inventory not processed at the end of last year carries over into this year's tax season, which just makes this even worse. IRS reduced its level of service goal. It's always been 85%. They dropped it to 70. So they're saying their idea is you call and talk to a person. That's it. That's their goal for service. They're saying 1/3 of callers in 2026 will not get to a person. And it's actually worse than that when you see how they calculate the statistics. Bear with me. They've reduced the training for new assisters. Well, we've all experienced that. New hires get training on routing and screening to answer basic questions. They can't do tax law questions. They can't help with amended returns. They can't help with complex account issues. So if you reach an IRS representative, which is what counts, that 70% is that you got to a person, and they don't help you, that still says we met our 70% goal. That's problematic, and it gets worse. We knew last year that they were closing taxpayer assistance centers, the tax. 35 are permanently closed. The remaining ones have unpredictable status of what they're going to do. Staff are leaving and not being replaced. Office hours have changed. Some are opening late, closing early because they don't have staffing. I've heard stories that there's folks in the upper Midwest, 4-hour drive to get to a TAC. There's the National 800 number to schedule a meeting, so it's not so bad. It's not like I showed up and nobody was there to help me, right? You'll be able to call and schedule an appointment. This is just a graph of how bad that inventory is. The darkest blue is from December of 19, and the lighter blue is where we were in December of 2025. Just look at those numbers. Just outrageous. Share that with your clients, right? Just put that up on the wall when somebody comes in and says, well, why is my amended return taking so long? Look how far behind the IRS is. It's not me. So the government shutdown, here's what it did back in October. They shut down October 1st because there was no funding. October 8th, they started furloughing people because the funds had expired. 23,000 of filing season staff, 59% were exempted and got to continue to work. Getting season ready. Working employees were paid using different money that they still had in the budget. If you remember, you could still answer the phone if you had the patience and get to someone, you could still call. But hiring events and onboarding of new employees were suspended during this period, which means we're approaching Thanksgiving. And we still haven't hired anybody. We still haven't, for the few we hired, we haven't started training. So this created a cascade of problems because direct hiring events were canceled. New approvals added layers because they're on how they're doing the approval process. And then this smaller window made it impossible to onboard and train a staff in time to have them ready for January. So TIGTA took a look at this too, and last year they paid $2.6 billion in interest for refunds and other processing delayed items that didn't get out on time to taxpayers. So when the IRS doesn't process a refund or resolve an account issue within the proper time frame, they're going to pay interest. So that's outrageous. In 11 months, $2.6 billion. So that's the only bright note in our clients who are delayed in getting refunds. So as it's well known, the IRS gave us $80 billion. Congress gave the IRS $80 billion with a B dollars in 2021 as part of the Inflation Reduction Act, and they just kept taking away that money. I think we lost 60% of that money already. So the IRS's IT department lost 16% of the staff that updates tax processing systems for all of the adjustments we need, the annual adjustments. They still got it out. They still got the systems open, not without too much delay. But there's a lot of risk that legislative changes and the inflation reduction amounts may not get implemented by the start. Well, they appear to be. The Zero Paper Initiative, which is being used to digitize older tax returns, has only reached a 4% completion rate. Contractors digitized 379,000 of 10.7 million paper returns. The backlog, of course, is impeding efficient account research. If I need help with an older return and it's not digitized, somebody's got to go down to the file room and find it. So this new case management system, Taxpayer 360, was going to be a pilot, and they found that it has some bugs. No kidding. So they decided not to do a full rollout to the telephone assisters until this September. The bulk of the filing season will be over, but they'll still have some time, I guess, to get trained and understand what's going on for next year, next season. Always looking ahead. Next season, next year, next decade. So this just illustrates some of the fluctuations of staffing levels, the ups and the downs of things. Remember, by October of 2023, we had hired a whole bunch of folks due to money from the Inflation Reduction Act. The current administration wants to downsize, and I guess we can all think that a leaner, less costly, more efficient government is a good thing. Let me know when we get there. We have a hiring crisis in submission processing. As I mentioned, they were looking to hire 2,200 people. 500 transfers from internal people, probably phone assisters, and 1,700 external hires. This was needed to get us through this tax season. I said they only hired 50 people. Not a great thing. So look at what the cause of this was. It wasn't from a lack of effort by the IRS, but comedy of errors. This systemic processing changes, the shutdown. The approval process requires authorization from both the IRS and the Department of the Treasury before you can even post a job announcement or extend an offer to employees, to potential employees. So add on the October shutdown, which shut down the hiring events. Add the 60 to 80-day training window to get people through the door. And people aren't up and ready for February, March, and April. Accounts management is doing a little bit better in its own hiring, but it has the same challenges. So they had a delayed approval, but by October of 2025, they were authorized to hire 3,500 people to handle taxpayer calls and correspondence. Between September and December, they did onboard 2,300 people, about 2/3 of the target. Again, though, late hiring, they had to abandon some of the training. It's either get them on the phone or tax season starts. Why do we bother? New hires were supposed to get comprehensive training on tax law questions and addressing account issues. Instead, they just got basic call screening and how to route a call. Not good. So now we have a two-tiered model: experienced staff on complex issues and new hires answering the phone, trying to do triage. The same people who answer the phone also process the paper inventory adjustments. So there's a conflict. What's more important? Answer the phone, process the returns. Now, historically, Congress cares if clients are complaining. Clients complain the most, I can't get through to anybody. So typically the phones are going to rule out over, are going to take precedent over processing returns. Now, I said earlier that 70% number really wasn't 70%. They were counting, if you got to a person, that counts as a successful call. That's bad, right? Because not 70% are getting help, 70% are getting the answer, 70% would recommend calling the IRS to a friend. They're not even doing that. So this is their new normal. They reduced their level of service goal, we said, to 70%. But how do we count that? 70% means they'll answer fewer than 1 in 5 because callers are giving up, getting a busy signal, not getting through, getting that famous "we're too busy, call back another day" message. This isn't good. The last time the level of service was this low or lower was 2022 when they had an 18% level. They think that was one of the worst years in IRS history. The 70% target is probably optimistic given the current staffing challenges. So the IRS CEO wants to look at enterprise metrics that will better reflect technologies like chatbots and AI assistants. But these things so far are unproven at large scale. So remember, the IRS CEO used to be the president of Fiserv, a credit card processing company. So he does know something about large-scale phone centers and large-scale client interactions. So believe it or not, he might be the guy to do some of this. He also runs Social Security, the IRS CEO. So this remains to be seen, though, where we can go and what it can do. We mentioned earlier taxpayer assistance centers have closed. 362 of them were closed during the shutdown. Most have reopened, but 35 remained closed. All right. So IT, we said some of the implementation risks, lost staff. TIGTA is worried that the implementation of legislative changes is at risk if they change anything else now, which we may see them do. If anything, only over the Affordable Care Act credits. What are they going to do? When are they going to do it? We said the zero paper initiative wasn't doing well. 379,000 forms out of a $10.7 million pileup they had. They're seeing partial implementation, though, with amended returns, but look at these numbers. So phase one, e-file, we can e-file a 1040X, but it has limited processing, right? They're still printing them out and punching them in, key punching them. Full functionality rollout was delayed to after this tax season. So hopefully we're going to end manual adjustments and the backlog and have straight automation. So, even though you e-file those amended returns, they're not getting fully processed by the automation systems. The amended return project, 500,000 returns behind, is going to systemically process adjustments for electronically filed forms, eliminating the manual work that has been creating the backlogs. And this is just they desperately need this. This is why we tell people too with the CP2000 and other things, if you don't need to amend, don't amend. So implementation was expected by January of 2026. It didn't happen. So right now, it's only handling the basic automation adjustments. More complex cases are still going to a person, still getting reviewed by a person. This is that Taxpayer 360 tool. The scaled rollout to 5,000 assisters, the phase 2 didn't happen, was delayed. Delayed until after September. So what do you want to know? Expect delays. If they're 129% above the pre-pandemic levels, which they weren't lighting the world on fire getting stuff processed then either. So we want to hope that it's just we're going to continue to have delays. You should be telling your clients. I've seen people tell people a year. That might not be unrealistic to get an amended return through. We said that the IRS expectations being reduced to 70%, which the way they do the guerrilla math means probably a third, 20 to 30% of people are actually getting their work done. It just reinforces the use of call and queue and other jump the line tools. Anything you can e-file should be e-filed. Don't mail it in, don't fax it in, e-file it. So what should we do? Well, we should be prioritizing e-file. Proactive client communications, tell them up front it's going to take a while. Show them these graphs, but tell people up front. Probably you want to automate this stuff. We're checking returns, powers of attorney, other things all the time through automation. Probably you should get an email out that said, hey, just want you to know I checked your case today, communicated with the IRS today, no movement, but we're on it. Why not, right? Saves them from calling you, emailing you, blowing up your email box. Do that twice a month, however you want to set that up. Again, document everything. Nothing we send to the IRS goes other than certified mail, electronic return receipt requested. This came up when I was speaking in Las Vegas last week, where folks were saying that, well, I send it priority mail and it's easy and I drop it in the box. Priority mail is not on the list of IRS, postal services where the presumption is moved to the IRS. If you send it certified mail, the presumption is the IRS received it, and they would need to prove they did not. So, and thank you, Donna Byrne, for looking that up. So think about that. Think about how you're sending stuff. We're adding $10 cost to send anything certified mail these days, and then the cost of somebody waiting in line. We have a lot of international forms that have to be paper filed, people that live outside the country. It's at least $25 worth of labor to have somebody go stand in line, right? Even if they have a stack of papers to send. So we're billing for these things. We don't have a choice. So position yourself for success without being redundant here, right? You want to communicate this stuff the best that you can. I want to mention some of the terms that were used here. Unpostables. These are transactions that fail validity check when you e-file it. Best unpostable is you think you have an S election and you don't. That return is unpostable and kicks out. Rejects. They can't be processed because they have missing or incomplete information. And this requires correspondence back and forth with you. It's usually a return that they can't use math authority to fix. So it goes, you've seen this, it comes with a green or a pink flasher. They need more information to get that return through. Error resolution is returns with error conditions that suspend them out of normal processing, but they can be corrected by a tax examiner. And there's a whole host of those stacked up. A good example, I think, error resolution is I claimed my child, you claimed my child, right? Only one of us can claim the child. Looking ahead, this season is going to separate us from God. Those that can retire from those who can't, I don't know. It's going to be one of the more brutal seasons, maybe. Add on all the OBA changes, add on so many things that have temporary guidance, safe harbor guidance, all the confusion around no tax on tips, no tax on overtime. Just people trying to get it right, and we're having difficulty getting it right. The National Taxpayer Advocate Erin Collins released her report this year. And I went through it with a lot of information. I'm not going to bore you with it, but I want to give you some of the big things that they're talking about. So last year, right, they took a lap and said, hey, we did a great job. 94% of tax returns were electronically filed. Only 11 million paper returns. That's still a lot of paper. 63% of those filed returns received a refund. The average refund was $3,167. They are very happy with how many people electronically file. But 3.6 million people experienced refund delays beyond standard processing time, which is outrageous. E-filers waited an average of 7 weeks on their delayed refunds. Paper filers waited 14 weeks. Processing suspensions affected 30 million of the 164 million returns. Outrageous, right? This stuff should boom, 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 and we should get it through. Identity theft, I've been picking on this. It's over 22 months, it's approaching 2 years. I think, of to get through these cases. They just have to figure something out, even if they have to outsource it. They have to figure something out. At the end of 2025, that inventory approached 316,000 cases. This is somebody whose identity was stolen and have some sort of disruption in their financial lives, their tax lives, while they're waiting for the IRS to fix these things. National Taxpayer Advocate wants these employees focused on the identity theft people, focused on casework until they get resolution time down to 90 days or less. Simple. You need more people, a lot more people assigned to it. During COVID, Commissioner Redding had surge teams. He sent 700 cross-trained people in to help with all of these things that needed done. Get 1,000 people on this. Get it fixed, right? You'll make a few errors, but get most of it fixed. They could do that. This just shows you how long it's taking them to get these things done. Just outrageous. 2 years, they want to get it down to 90 days. So the continued reduction of people at the service is just going to threaten their ability to operate as a business, at least in the short run, because there was no planning. We just let people go. 27% of staff left in 2025. We dropped from 102,000 people to 74,000 people net, right? Net people. So it's one thing if we cut back. It's one thing if we have people doing more. It's one we give people tools to do more. That's a lot of people. What's going to suffer? Service is suffering. We're already seeing it on the phones. The additional lag time to get work done. Right? Forget about their writing projects, things that aren't done. You saw that they needed 2 extra years on Secure Act 2. Secure 2 was passed in 2020, 2019. And here we are. It's going to be 7 years out before some of the regulations are written. So it's just a lot of institutional knowledge went out the door with these folks that left. Taxpayer services alone was a 21% reduction in people. These are the folks that answer the phone, open the mail. So it's just a bad time for this. So you can see how this factors into the one big beautiful bill. We enacted it. We added a whole new form for the 5 big deductions that we need to deal with. Thank goodness they didn't redesign forms. They just put all of the temporary deductions on one form and added one line to the 1040. They spent a lot of time getting the programming working, getting the systems working, and they were able to go live last Monday. The big 4: auto loan interest, no tax on tips, no tax on overtime, the additional standard deduction for those age 65 or older. So we're phasing out paper checks. We've talked about this. I have a great explainer. The IRS issued a little bit more guidance the other day. So that's on the YouTube channel. Take a look at that. 6 minutes of your time, well worth it. They haven't resumed this yet, but at some point they're going to resume refund offsets. In other words, taking money out of your IRS refund for defaulted student loans. They haven't done that for a while, since before COVID. So at some point they're going to have to start doing that again. Take your refund to pay off your debt. Of course, people are going to say, and I owe them? I haven't heard from them in years. I still owe them? So this also came from our friends at the National Taxpayer Advocate. Assessment of taxpayer rights, services, and rights. They evaluated how well the IRS is protecting the 10 fundamental rights in the Taxpayer Bill of Rights. Here are 6 of them. We talk about this when we're having trouble with the IRS and we're writing letters. And I tell practitioners all the time, your client has the right to be represented. Your client has the right to finality, to be informed, to quality service, and to the right to appeal. And these are things that you sometimes have to tell that first-line IRS employee. That sounds like you're violating the Taxpayer First Act. Are you sure? You want to go there? Be polite about it. All right. This is she brought up a couple of issues about the phone that I'm just going to skip over, but this is the same thing, right? How their metric is misleading. I spoke to an employee, I was routed to a bot, but look at that, 1/3 of the calls are abandoned. And we talked about the IRS, how they're calculating their level of security. This also came the level of compliance with getting through to people on the phone. And this is something that the National Taxpayer Advocate brought up in her report as well. So NTA, National Taxpayer Advocate, addressed 10 issues that are super important. The 10 greatest problems facing the IRS, facing taxpayers. We won't go through these. They're in her report if you want to read them, but just high level. Excessive processing times, no kidding, right? Things shouldn't take a year, 2 years. Form 907, the extension nobody knows about. Form 907 allows a taxpayer and the IRS to extend the statutory deadline for filing a lawsuit. This protects taxpayer rights when claim processing is delayed. This is critical on ERC claims because we're gonna run out of time, and the IRS has actually stopped processing a lot of them. If you know somebody who has any quarter $50,000 or less, and it's a claim based on decrease in sales, not supply chain, but decrease in sales, they're going to need to sue. Any of these folks are going to need to sue at this point to get their money. But if you have somebody that's under $50,000 a quarter and it was a reduction in sales case, we have attorneys that will help on a pro bono basis. Let me know that you've got these cases. We'll put you in touch with someone. The Taxpayer Advocate is recommending Form 907 be promoted a little bit here, clear procedures for execution, and they want them proactively offered when a processing delay approaches statute expiration. That's easy to do. You just mail it to people with a cover letter. Second most serious problem, modernization and digital risks. It's taking them too long to roll this out. The contractors aren't big enough. They don't have enough information and enough resources to get it done. We've talked about the phones, right? They're not working. Phones don't work. People are being transferred to bots, and that counts as a call. That counts as a successful call. The independence of appeals is probably under threat. Most serious problem number 4. 337 days is the average delay on appeals cases. Why? Appeals people have retired or been reassigned during or after the last shutdown. Not great. We've had appeals go through 3 people while it's sitting there, right? Whose inventory is it? Whose inventory is it? Easy way around that is if it sits there 180 days, I win. That's an easy way. Tie goes to the runner. Let me win. So this wasn't something that I had really thought about. So the Tax Pro account lacks basic features available in the individual taxpayer accounts, including viewing notices and transcripts. Seems like a no-brainer. They should let us be able to do that, save a phone call. Digital authorizations only work for individual taxpayers. I will tell you that they don't work that well. We still don't see anywhere near 100% accuracy. We're still submitting paper forms. CAF relies on manual transcription of faxed and mailed forms. I would tell you should upload them is the only way to do it. A lot of powers of attorney sit in pending review status. I don't know what to say there. We've been uploading things as best we can. Right now it's at 6 days. You know, every time there's a holiday, you lose a day. It adds a day to the delay, to the processing schedule. So there's confusion about when you need to do a FOIA, when you need to are entitled to something under a routine access request. So taxpayers who want their own records often face arbitrary barriers, respond directly. Procedures vary widely by employee and business unit. So taxpayers have to use a FOIA request to get things. Frank Agostino got me on a call listening session, and I got Mark Dombrowski to come on it with me because he does a lot of collection appeal cases. And I can't think of the guy's full name. It was Andy. Andy, it sounds like the guy from that 70s show. Andy. Anyway, he was the new director of the Independent Office of Appeals. And he said his vision for appeals, this is an IRS employee, says his vision of appeals is at the end of an appeal, when we agree to close it unagreed, you should be able to say to the appeals officer, hey, when are you going to have that ready that you can send me over a copy of the file? and you should be able to get a digital copy within days, is his thinking. That'd be a wonderful world, because FOIA is always backlogged. You don't always get what you want. They sometimes make mistakes. They sometimes make redaction errors. And it would be great if you could actually get those records much more quickly. Probably still need a human to look at them. You should get them more quickly. I won't even touch social media misinformation. That's a most serious problem, according to the Taxpayer Advocate. Speaking of Frank, the last 2 years at the barbecue, we had 4-hour-long panels. 1 4-hour length panel in 2025 and 2024. And these featured IRS employees, attorneys, and other stakeholders. There's a lot out there. There's a lot of what the IRS is doing out there. It's very interesting, and it's evolving. There's a big tax court case coming out of the New York calendar call. Everything is settled. They're waiting for the judge for the court to write it up, and this is going to start to change some of those things for us. You already know about these scams, probably. That self-employment tax credit thing. Man, that was bad news with get your $60,000 refund. Living abroad creates a lot of additional forms that need to be filed, some of which have to be done on paper. There's no way for an international caller to call toll-free. There are no VITA or tax compliance for elderly sites abroad. Foreign banks don't want U.S. citizens as customers. Taxpayers can't make or receive electronic payments from foreign accounts. Well, we know the workaround there. If you join American Citizens Abroad for $60 a year, you can open a U.S. bank account with the State Department credit union, and that'll give you U.S. banking. So that we can work around with people. Withholding certificates. FERPTA withholding certificates can take 9 to 12 months, and they're wrong a lot of the time. And they don't post to the account a lot of the time. It's terrible dealing with FERPTA. They need to figure something out to make that work better. Form 8802 delays, we've had all sorts of delays. This is when you need the U.S. government to say, hey, John is a resident of the United States and therefore can benefit from the U.S. tax treaty with name of your country inserted here. We've had issues where some of these folks that need them, they need them right away for the start of the new year. Their prior year tax return isn't completely processed by the government. All sorts of issues. It didn't help that these things are processed in Philadelphia and Ogden. Everybody I knew that worked the second shift in Philadelphia retired, and the folks that are there are helpful, but they don't seem to be able to help as quickly as other folks did. I'm not going to discuss this, but the National Taxpayer Advocate mentioned these cases as examples of certain areas that were litigated heavily. So maybe Congress should take a look at why we're doing that. Why is the jurisdiction in CDP cases being litigated? They would like the tax court to change a few things so that the tax court can make certain refund decisions. Muckey versus Commissioner, the IRS lacks authority to assess 6038B penalties for foreign information reporting failures. Ooh, but you need to sue in district courts to collect the penalty. Very interesting. In Donlin versus Commissioner, typed names on a generated petition by the tax court's Dawson system that constituted a valid electronic signature. Thank goodness. Maybe we're going to see some modernization here from the It Must Be Inc. Number of legislative recommendations that came out of the National Taxpayer Advocate's report. She would like to see the IRS authorized to establish a minimum standard for paid return preparers and be able to revoke the PTINs of sanctioned preparers. Right now, you can't revoke a PTIN. You need the Department of Justice to sue to enjoin a person from preparing tax returns. Or in criminal matters, sometimes part of the criminal settlement is they voluntarily give up the PTIN and agree to not apply for another one, right? Not do returns for a fee. They'd like to see accessible penalty reform. So accessible penalties such as the international reporting forms should be subject to deficiency procedures, giving you some more due process, the ability to get a pre-assessment notice and tax court review rights. Right now, on these penalties, you just get a bill for the penalty. No CDP, no other rights. Tax court jurisdiction, they would like to see it expanded because right now refund cases have a two-form system. I actually have to sue the federal government to get my refund. The tax court can't say, yes, the IRS does owe you this refund. You have to go to district court, which can be expensive. That's why I mentioned the ERC lawsuits, the ability to get those done on a pro bono basis. If it's going to if you owe $20,000, it doesn't make sense to spend $20,000 to try and get it back. Finally, the National Taxpayer Advocate has three other recommendations. Timely claim access, require the IRS to act on claims or credits within a year. So they can't just delay with those. We need 60 more day letters. Child Tax Credit Act.